So we are going to start off with our question 4 of the 2014 normal examination fundamentals of accounting. So question 4 has to do with non-profit making organizations. Yeah? So we are given a trial balance of the Mighty Soccer Club, a non-profit making organization. We said that these are organizations that their main aim is not to make profit, but to render service to their members. So we are given a trial balance and some additional information, and we are required to draw up a bar trading statement for the year ended 31 August 2013. So we said that when it comes to non-profit making organizations, they don't have the same books or same statements as trading businesses. They have an income, for example, they have an income and expenditure account, while trading accounts have an income statement. Ne? And we also say that when a non-profit making organization decides to have a trading business in the organization, such as a bar or so, then you will be required to draw up a trading account for the trading business that they are doing. So 4.1 asks us to draw up a trading account. So we say that a trading account is the first part of your income statement that ends at gross profit. Now with the non-profit making organizations, it ends at gross profit, and then you subtract wages that had to do with the bar or the restaurant, the expenses that had to do with that trading business. For example, the wages of the barman or the bar lady or so. Okay, so let's throw up our trading account. If we can please turn on our mics, because I won't be doing the talking alone, because we did these things already. So we are going to do this question together, just like other questions that we did yesterday. Okay, so we said that in a trading account is the first account. Trading account is the first part of your income statement, meaning it's sales less cost of sales equals to gross profit. So looking at this, what was our sales amount? So we are given bar purchases and sales. We know that purchases is an expense, so the expenses are on the debit side. So the sale is the one that is on the credit side, which is 210, and 348,000, ne? And then we said that from there we less cost of sales, we less our cost of sales. We know that cost of sales is calculated by taking your opening inventory. And then you add purchases. And then from there, you less your closing stock, less closing inventory. So our opening inventory, we're told that bar inventories at the 1st of September was 12,600. Our purchases, we are given that is 43,900. And then our closing inventory We're told that bar inventories at 31 August 2013 were valued at 5,100. So we minus 5,100. So what will be our cost of sales amount? Can we quickly calculate our cost of sales amount?
Okay.
Huh?
No. It's 51,400.
So we get 51,400. And then what we get is our gross profit.
That is cost of sale.
Correct. Yeah, the 51,400 is cost of sales.
Yes.
So sales less cost of sales, we get gross profit. So how much is our gross profit?
158. 948.
158.
948.
948. So 158, 948. And then from there, we check if we have wages on bar. So we were told that we have wages on bar staff. So the wages on bar staff were 15,000. And then you check if you have any additional information that affects our wages on bar staff. Now looking at this, we do not have any. And so we record it as it is. We less wages on bar staff. That is how much? 15,000. Okay. So gross profit less wages on bar staff will give us our profit from bar. That will be transferred to our income and expenditure account. Profit from bar.
Okay.
So it's how much? How much is our profit from bar?
It's 143,948.
143.
948.
948. So the profit from bar was 143,948. Okay, that was 4.1. So we move on to 4.2. In 4.2, we are asked to prepare our income and expenditure statement for the year ended. And please don't forget the headings. So this is trading account of the name of the business and for the year ended. Make sure you write the heading. Now this is the income and expenditure account. Income and expenditure account of the name is the business for the year ended as well. Okay. And then we draw up our income and expenditure account. So we draw up our income and expenditure account. Now, in the income and expenditure account, the first thing that you record is incomes. Okay, and then you list down all your income. So what incomes do we have there? What is the first income that you always write?
Profit from the
Profit.
The main income. What is the main income of a non-profit making organization?
Subscription.
Subscriptions. So we have subscriptions. Now looking at subscriptions, we have accruals and prepayments. Ne? We are told that we received in total 12,100. But if you look at the additional information, you are told the subscription paid in advance by members at 31 August 2013 amounted to 2,700. So we have a prepaid income there. Ne? And what did we say about prepayments at the end of the period? They are subtracted because they belong to the next financial period. You understand?
Mhm.
That's why you will have 12,100 minus the prepayment that was made, the amount that was received in advance of 2,700, meaning this amount belongs to the next financial period. Do you understand?
Yeah.
Do we understand? Hello?
Mm,
Yes.
Do we understand?
yes, yes, meme.
Okay, and then so it's 9,400. So our total subscriptions for the year is 9,400, and then we record again our income, which is profit from bar. So how much is our profit from bar?
143,948.
So it's 143,948. And then from here, what other profits do we have?
Profit or income?
I mean, what other income do we have?
Yeah.
Huh?
Maybe profit from raffles.
Yes, profit from raffles. So you are told that profit from raffles is how much? Is 10,500, ne?
1,500. Mm.
And we check, do we have any additional information that have to do with that? We do not. So we record the amount as it is, 10,500. Okay. Now we look again. Those are the only incomes that we have, right?
Mm.
Therefore, we add our incomes together and then we record our final amount next to incomes.
Okay.
How much are we getting? Eight four eight.
163.
163,840.
848. Okay. And then from there, we less.
The subscription. Are we not using that formula of saying over prepaid? What? Are subtracted or something like that?
Which formula? Yes, yes. We at the we only have a prepayment at the subscriptions, and we say that the prepayments at the end of the year are subtracted. That's why we received 2,700 in advance. That's a prepayment. That's why we subtracted from our 12,100, and that is the only prepayment that we have. Or do we have any other prepayment?
Oh, okay.
Yeah.
So we less expenses, but
Eh? And then we less our expenditures. We less our expenditures. So what expenditures do we have there? Oh, it's very hot.
okay.
Expenditure.
What expenditures do we have there? Expenses.
General expenses.
Uh-huh.
Starting from the soccer clubhouse.
Soccer clubhouse is an asset.
Oh.
That's an asset. Like a house. The word house already tells you that it's an asset. Equipment is an asset. So we are starting from
Garden wages.
Gardener wage.
yes, gardener wages.
What is accrued like? Gardener wage.
I think that these are salary of the gardener. They probably have a garden or something.
Mm.
Oh, and now because you are told that you have
And then
accruals, you have accrued gardener wages, right? And therefore accruals, we said that accruals at the end of the year, they are added because they belong to the current financial period. So you will have 6,500, and then you add your accrual gardener wages of 700 because they belong to this current financial period. Do you understand?
Mm.
And then so we'll have 7,200 total.
Okay. Then we have general expenses.
And then we have, sorry, I just lost my question paper
Professional
again.
soccer salary.
Junior expenses.
The I lost my question paper again. Okay, here. And then we have professional soccer salary.
900, 9,000.
So we have the professional soccer salary. Now we check, do we have any information, any additional information that affects that? We do not, so we record it as it is. Okay. And then from there, what else do we have?
General expenses.
We have general expenses. And then our general expenses, we do not have any transaction that affects it. So we record it as it is 3,950.
950.
What else do we have? The last expenses is what?
Depreciation.
Pardon?
Depreciation.
We have depreciation. That is always the last expenses that we should always have. Don't ever forget about depreciation. So depreciation, in this exercise, depreciation was already calculated. So we are told that depreciation is 2,848. Right?
Or depreciation.
Okay. Now those were our expenditures. Now that we are done recording our expenditures, let's add our amount together, then we get our total expenditures.
$22,998.
22?
Thousand
22,998.
98.
Okay, this we are subtracting, so it should be in brackets. Okay, so we have income. Our incomes are 163,848 minus our expenditures, minus our
140,000.
expenditures of 22. How much are we getting?
140,850.
140,850, right?
Mm-hmm.
And this is a surplus because our incomes are more than our expenditures. Any questions?
Oh, if it was less than our what? Our expenditure?
Then it's a deficit.
Called what?
It's called
Oh,
a
deficit. Yeah.
deficit. Something like this. Deficit, yeah.
Okay. Yeah, I remember now. Yeah.
Or you can call it expenditure excess over what? Over incomes. I think that can be found in one of I think I saw that in one of the in one of the slides. Any other questions?
No question?
So if we do not have questions, then we move on to our next question. Now in our next question, we are asked to draw up a balance sheet statement, a balance sheet for the year ended. Okay. So we draw up our balance sheet. Bernice, I have sent you the question paper on WhatsApp that we are using. You just joined now. So quickly check your WhatsApp and find the question paper that you are busy with. We are busy with question 4. Okay, so we move on. We said we are moving on with our balance sheet. So the first thing that we record in our balance sheet are assets. Yeah? And then fixed assets, non-current assets. And then we said that because non-current assets depreciate, we have the cost, the depreciation, the accumulated depreciation, ne? And then the book value. This is the cost price. Okay. So our first non-current asset there, we have a soccer club house. So the soccer club house, this is a house. We said that land and building, a house is a building, right? We said land and building do not depreciate. That's why you have 120,000. You have no depreciation because the building does not depreciate, and therefore you have 120,000 as your book value unless it appreciates. And then from there, the next one we have equipment. Our next fixed asset is equipment. So the cost price of equipment was 30,000. We do not have previous year accumulated depreciation, so we only have depreciation for this year, and therefore that's the one that we will use. So provision for depreciation was 2,000. 848, ne? So how much will be our book value? 30,000 minus 2848. Ooh.
What?
How much? Am I correct? 27,152. Okay, so these are our only, now looking at this, these are our only fixed assets that we have. So because these are the only fixed assets that we have, then we'll need to add up our amounts. We'll need to add up our amounts. So 120,000 plus 30,000, obviously this will give you 150,000. This is a negative, so it should be in brackets. And then this will still give us 2,848. So 120,000 plus 127,152 will give us how much? It will give us 147,152. So 147,152. And then from there we said that the cost price and the accumulated depreciation columns end here. They end at non-current assets, and therefore we should draw double lines to show that there are no calculations after. These are the final amounts. Why? Because fixed assets are the only ones that depreciate. But then for the book value, we still need to add our current assets. Therefore, we do not draw double lines at the book value amount because that is not the final amount. So from there we move on to our current assets. So what current assets do we have there? What type of current assets do we have there? Anyone?
Current assets.
Inventory.
We have closing inventory. And our closing inventory is 5,100, ne? Our closing inventory, which was given in the additional information. Okay, what other current asset do we have?
Cash in the bank.
Cash at bank. We have cash at bank of how much? 9,780. What else?
We have additional there, or
Ah.
is it not going to be added?
That says
It says the soccer club had a cash balance of 6,248.
yes,
That
the
was
soccer
kept
club
by
has
the
a
cashier.
yes. We have cash there at our additional information, our cash balance. We're told that cash at bank is just bank. This is the cash, this is the amount of money that you have at your bank account. And then in the additional information, we are told that we have cash, our cash balance amounted to 6,248. 6,248. Okay. Do we have any other current assets? Now looking at this, we do not have any other current assets, and therefore we add our current assets together, then we record the amount here. So how much
Yeah, we
our
have
total current
accrued.
assets? How much?
21,128.
21,128. Ne? Did you say 21,128?
21,000.
Mm-hmm.
21,128.
Okay. And then from there, we add our non-current assets, the non-current assets amount plus our
Yeah,
current assets will
21,128.
give us our total. Will give us our total assets. So how much are our total